There are 3,150 homes scheduled to be auctioned this week. It's the last big week of the year. New South Wales will host about 1,100 auctions, with roughly 840 of them in Sydney. Victoria will host about 1,400 auctions, with about 1,300 of them in Melbourne. Queensland will host about 330 auctions, with roughly half of them in Brisbane. South Australia will hold about 200 auctions, with virtually all of them in Adelaide. Western Australia, Tasmania and the NT will hold about 40 auctions between them, and the ACT, well, they'll have 123 auctions. Taking a look at the most viewed properties going to auction this weekend. In New South Wales, the top home is number 59 Toby's Boulevard, Mount Pritchard. The top property in Victoria is 72 Aberdeen Street, Geelong West. This cottage has been totally redone and refreshed. The top property in Queensland is 107 Coghill Road, Butterham. This four-bedder is painted entirely in white. The top property in South Australia is 15 Eaton Street, Malvern. This charming sandstone home has 4 bedrooms. And the top property in Canberra is 11 Dolling Crescent, Flynn. And the most viewed property on the REA Group website this week is called the Candy Shop Mansion on the Gold Coast. It's owned by a bloke called Travis Benyon, who refers to himself as the Candy Man. He's the owner of Free Choice Australia, which is a chain of tobacconists across the country. That's him right there. But he's renowned in Queensland media for the parties that he hosts at this place. Just have a look at some of the footage from the most recent party this year, and we've edited it to keep it suitable to broadcast. The address is 36 River Cove Place, Helensvale. The house has 14 bedrooms, 13 bathrooms, space for about 16 cars, and sits on almost 6,000 square metres. It's got a massive frontage along the Coomera River, a giant swimming pool, and huge landscape gardens. The home comes with gold-plated tiles, a 27-tonne statue of King Neptune, a marble-clad fountain, a giant chandelier, and a 15-seat home cinema that includes a questionable leather bed. We just hope the place has been disinfected since the last party. For more on property, I caught up with Cameron Kusher from REA Group a little earlier.
Yeah, there certainly are, Ed. We've seen 3,150 auctions currently scheduled for this week, which is 20% higher than the same week last year. And we're continuing to just see a lot of people prepared to put their properties on the market. In saying that, even though there are more properties coming to sale or coming to auction, we have seen over the last few weeks that auction clearance rate continue to drift lower. In both Sydney and Melbourne, we're seeing clearance rates around 55%. At the moment. And remember, earlier in spring, quite regularly we were seeing auction clearance rates around 65 to 70%. So the increase in stock has certainly led to a lower clearance rate.
Right, so more stock on the market, more choice for buyers, so they're being a bit pickier when it comes to auctions. They're not all furiously bidding for one home.
That's exactly right. And I think also they know that there are fewer bidders and there is less competition. So a lot of people are trying to buy properties before auction. And I think a lot of vendors are getting reasonable offers before the auction as well. So taking the opportunity to take those offers before we actually get to the auction. But certainly there is a lot more stock in both Sydney and Melbourne, both for auction, but also just generally available for sale than there has been for some time. So it's taking some of that urgency out of the market.
And is this the final big weekend of property sales for the year? Is it now going to start to wind down?
Yeah, definitely. This will be the last big week. We've got more than 1,000 auctions this week in Melbourne. We've got about 850 in Sydney, and then things are really going to wind down. And then we're basically looking to either the last week of January or the first week of February before things will really start to ramp up again.
Yeah, and just looking back on this year for property, has it been a lot better than you've anticipated?
It's been so much better, I think, than we anticipated, and certainly a lot better than anyone was really anticipating. We had forecast that prices would fall 7 to 10% this year. Nationally, by the end of the year, they'll probably be up about 5% from where they were 12 months ago. So it's been a real reversal of things, and it's really been driven by just a complete change of direction in a lot of conditions. Late last year, we were seeing very low sales volumes. We were seeing weakening demand. We were seeing properties taking longer to sell. And that's all changed this year. From February onwards, we saw a strong rebound in sales activity. We've seen demand for properties pick up right throughout this year. We've seen properties selling a lot quicker. And then from the middle of this year, particularly in Sydney and Melbourne, we've seen a greater preparedness from people to put their properties onto the market as well. So it's given people the opportunity to sell, but also the people that have been crying out for more stock to come to the market, the opportunity to buy.
The Reserve Bank obviously kept the cash rate on hold earlier this month. Their next meeting is in February. Do you think the cash rate is now at its peak in Australia?
Look, I think it should be, but in saying that, I think it's all going to be dependent on what that Q4 2023 inflation data looks like when it comes out in late January. And if it is too strong, I don't think the Reserve Bank's going to have much choice but to lift interest rates. If that is, I hope that's not the case, but if that is the case, I do think that will be the last interest rate hike we see. So I think the good thing for 2024 is there is going to be in interest rates much more stability and certainty, and that's certainly going to help the property market.
But I guess one of the surprising things about this year has been the cash rate has risen quite a few times. I think there was 5 rate rises this year, but property prices have kept going up as well. So it hasn't really had a big effect on the actual pricing in the market.
No, it certainly hasn't. And again, that's been one of the really surprising things this year. We knew last year interest rates went up a lot, and they were going up pretty much every month last year. That hasn't been the case this year. But we were also expecting further interest rate hikes this year, and that would continue to dampen market prospects. But it really hasn't. I wonder if in some ways it's because people could see that the end of interest rate hikes was in sight, and it was just time, they'd put off buying and selling for so long that they just needed to move along with things. As I said, I think next year it's going to be a much more stable environment. Yes, interest rates are going to be the highest they've been in 12 years, but we're not going to have that chopping and changing every single month or every single couple of months like we've had over the last 2 years.
And then next year, 2024, what's the sort of property price forecast that you guys have at REA Group?
So nationally, we're forecasting prices to rise between 1% and 4%, which is a slowdown from the rate of price growth we've had this year. Basically, the thinking here is more broadly, the economy is going to slow next year. We're already starting to see economic growth slowing. We've got that weaker productivity performance. We've got retail spending slowing. We've got household consumption slowing. And we're starting to see that unemployment rate drift higher as well. So our view on all things is that, yes, prices will still rise next year because we have got that strong demand in the housing market, but the rate of price growth is going to be more sluggish. We expect that Perth, Adelaide and Brisbane will outperform, moderate price growth in Sydney and Melbourne, and in the smaller capital cities, either slight price falls or marginal price increases next year.
Well, Cameron Kusher from REA Group, thanks for joining us on the last episode of Business Now for the year.
Thanks for having me, Ed.